debunking the markets for the week beginning 18th January 2021. A week in which the transition of power happens from red to blue in the strongest democracy in the world, which saw some sordid maneuverings post-poll and that culminated in the double impeachment of the president. Amidst this turmoil, the Chicago Fed Reserve President Charles Evans attempted to spike the US Treasury yields with some leading statements, like the fears of tapering of earlier years. However, the US Fed Reserve Chair, Jerome Powell, was quick enough to assuage the market fears, and the US Treasury yields traded lower. The Nasdaq has shed close to 200 or more than 200 points week over week, with US dollar index firm at 90, Brent crude as well as gold remaining static week over week, and the President-elect Biden already announcing a $1.9 trillion COVID relief plan. Indian rupee, which closed at 73.07 against the dollar on Friday, is most likely to trade in the range closer to the 73.50 during the week ahead. The Reserve Bank of India announced the revert to pre-COVID form of liquidity management and announced a 14-day variable reverse repo auction for 2 lakh crores. However, this was seen as a liquidity tightening measure by the market participants, though the liquidity surplus banks stand to earn a higher yield than parking their funds in the overnight repo. The RBI's attempts to engage with the market participants, as well as its announcement late in the evening about an OMO bond purchase program, could not hold back the yield on the 10-year benchmark bond from climbing to 5.95% for the newly auctioned paper, which carries a coupon of 5.85%. The 3-year interest rate swap points have also climbed to 4.42%. Just like the fears of tapering, which kind of frightened the markets, the US markets in the 2012-13 period, these apprehensions will also stand to pass, is my take on the interest rate scenario. Week over week, the Nifty, though has posted marginal gains, on Friday it lost 1.11%. And the options volatility has also heightened, with VIX climbing to 24. During the week, the offer for sale from Steel Authority of India Limited and the IPOs of IRFC as well as Indigo Paints are slated to commence. Indigo Paints, which presently commands significant grey market premium, is priced at an exorbitantly high PE compared to that of the market leader Asian Paints. However, the company, which began only in the year 2000, has posted total revenue growth of a compounded annual growth rate above 21% and carries insignificantly low long-term debt of about 24 crores only. For gold, the technical charts indicate a strong support at 1780, which is currently at $1847 per ounce. The markets have also shrugged off the drop in CPI to 4.59% as core inflation remains elevated, and month over month the growth in manufacturing as well as consumption of power have not been encouraging. Have an interesting week ahead.